that in our last video we have studied about the structure of Indian financial system. Last video, last slide, Indian financial system structure, in which financial institution, that is banking institution, non-banking institution, under banking institution, that is commercial bank, cooperative bank, regional rural bank, foreign bank, and in financial market, that is unorganized, organized, unorganized, it is capital market and money market, and capital market, that is secondary market and primary market. Financial service and financial market instrument we will cover in our next video. In financial service, that is fund based service, then free based service, we will study about detail about the meaning of leasing, hire purchase, consumer credit, bill discounting, factoring, insurance, etc. Then fee based service, that is issue management, merchant banking, credit rating, debt restructuring, stock broking, etc. First one, it is financial institution. What is financial institution? In our day-to-day sense, we study financial institution, we consider mostly as a bank. So what is the exact meaning of financial institution? Here, financial institution are the business organization that act as a mobilizer. Mobilizer means the money can be transferred or moved from one place to another, and the depositor of savings and credit or finance. Financial institution render financial service or dealing in financial claims. Financial institution render financial services that service provided by the banks, savings, providing credit facilities, then as a broker, as a agent, not broker, as a agent between the in share market, in dealing the markets. Then other financial claims that are also covered under by banks and financial institution. Financial institution are business organization that act as a mobilizer of saving and finance. This is the important term, that is financial institution are business organization that deals or that as mobilizers of savings and finance. So next, classification of financial institution. Financial institutions, that is banking institution. Banking institution are those institutions which participates in economics payment system. They provide transaction services. Here examples are commercial bank, that is SBI, syndicate bank, cooperative bank, that is KDCC bank, cooperative bank, then Shirshi urban cooperative bank, then regional rural bank, that is mostly RRBs, which have most funds in Karnataka, that is Karnataka Vikas Gramin Bank. These type of bank which are RRBs, that is regional rural banks. Then foreign bank, that is Citibank, then Bank of America. These type of bank which have the headquarters in foreign countries and have branches in our country, same like MNCs, but they MNCs are companies. These are the financial institutions. Then also non-banking institution. Non-banking institutions are those institutions which act as a credit and they will not create a credit, such as RDBI, LIC Life Insurance Corporation, UTI, which is Unit Trust of India, which was established in 1993, Ahmedabad for headquarters, and now it is also renamed as Axis Bank, UTI, Unit Trust of India. So we will move. What are financial market? This is the meaning and classification of financial institution, and next it is financial markets. Financial markets, that are money market, a market where short-term funds are borrowed and lent, is called a money market. It deals in the short-term monetary assets which maturity periods of 1 year or less. The short money market, which is for the short term, for less than 1 year, less than the 1 year. It is short term monetary assets with a maturity period of 1 year or less than 6 months, 7 months or less than 1 year. The liquid funds as well as highly liquid securities are traded in the money market. Example of money markets are treasury bill, T-bills market, then call money market, commercial bill market, etc. The main participant in these markets are banks, financial institutions and government. In short term, money market is the place where the demand and supply of short term funds are met. Short term, where the money, short term, that is day to day current asset, working money or working the funds which use in a regular working periods, that are called as for regular working. In accounts we have long term and short term. Then it is here, that is working where working capital, that is the main area participant in these markets are banks, financial institutions and the government. In short term, money market is short term fund are borrowed and lended. This have in simple one, short term funds borrowed and lent, then maturity is less than 1 year. Then these are the examples, that is T-bills market, call money market, commercial bill market, and where the demand and supply are met for the short term or short term funds, same as here. So next, classification basis on types of financial claim. On the basis of financial market may be classified into debt market and equity market. Debt market, this is the financial market for fixed claims like debt instrument. Equity market, it is the financial market for residential claim, that is equity instrument. That means whatever you have particular interest for debt, yes, fixed amount of fixed claim, fixed amount of interest. Whenever we have debenture, fixed amount of debenture interest we get on debenture. But for the equity we get dividend, that is dividend are paid on equity instrument. That is, as the profit increases, the percentage of dividend paid to the equity shareholder will be more. Then capital market. Capital market is the market for long-term fund. This market deals in the long-term claims, securities and stock with maturity period of more than 1 year. Money market, that is short term, for short term less than 1 year. But capital market is for long term and more than 1 year. It is the market from where productive capital is raised and made available for industrial purpose. There it is made for financial bank, institutions and government. But here it is made available for industrial purpose. Stock market, government bond market and derivative market are example of capital market. In short, capital market deals with long-term debt and stock. Capital market, money market, it is short term. Your capital market is for long term and it is deal for available for industrial purpose. Capital, rising of capital. So classification under capital market, that is primary market and secondary market. We have studied first in our that diagram. Primary market are those market which deals in the new securities. Therefore, they are also known as new issue markets. These are the market where securities are issued for the first time. In other words, these are the market for the security issued directly by the company. Primary, it is directly issued by the company. Primary market mobilize savings and supply fresh or additional capital to business unit. In short, primary market is a market for raising fresh capital in forms of shares and debenture. Primary market is a market for raising fresh capital. It is first time deal with the directly issued by the company. So next, secondary market. Secondary market are those market which deal in the existing securities. Existing securities are those securities that have already been issued and are also already outstanding. Secondary market consists of stock exchange. Stock exchange are self-regulatory bodies under overall regulatory purviews of the government and SEBI. They are secondary. It have been already issued and they are outstanding, and they are self-regulatory bodies on the overall the regulatory purview of government and SEBI. They are consist of stock exchange market. It is controlled by SEBI, Stock Exchange Board of India. Then next it is organized market and unorganized market. Unorganized, these are the financial market which financial transaction takes place within a well-established exchange or in a systematic and orderly structure. Organized, well-established exchange and systematic or orderly structure. Unorganized market, there are financial market in which the financial transaction take place outside the well-established exchange or without systematic or orderly structure or arrangement. Organized, well-structured, systematic, yeah, without systematic or not orderly structure or arrangement. Next,